All right. This is something that's going to be very complex. This screen record, this is something that's not going to be necessarily easy to understand. However, I'm going to try to walk you guys through it. I've been talking a little bit about Elliott waves in terms of where the market's going. For the past, couple, month or so, and really what I've been doing this past weekend is doing an in-depth analysis on Elliott waves and really determining where this market's going to go. And what it's telling me right now is that we are at a major turning point in the market. We are right now between we are transitioning on the third leg of the monthly time frame to a fifth leg on the weekly time frame, and finishing off a fifth leg on the daily time frame, if you guys can understand this. So I'll kind of review each one with you right now, and what I'm seeing, where everything's going, where projections are going. So let me just take all this stuff off and just kind of step you through it. So we had this long bull run up to here. Then we had a correction, in the early parts of this year, all throughout, April and March. And then we went through this sideways triangle pattern. And from here, the market's gone on a nice bull run. So what I'm going to say right here is the start of this wave starts to submissive minor cycle. Okay, just make sure I have my numbering right. This is a triangle going up. Probably start. No, this is technically a flag pattern in here. So I would have to start it down here. The flag down there. That's the end of the second wave down there. Or actually, hold on. That's the start of the second. This third is all the way up here. Fourth is down here. And the fifth is up here. That's more or less what I'm seeing on this time frame. And now it's determining what we can do with this information upon larger time frames. Larger time frames are, that looks like a wave. This looks like a wave, and this breakout looks like a wave. So we'll put minor wave. This is the breakout. This is a complex flag pattern going into it. So you do there. This is a complex flag pattern too. Up to here, this is a simple flag pattern. Up here, it's just a straight pullback instead of this being down here. This was a complex pullback where you have a new high created. Oh shoot, and that goes up here. So a weekly is saying we're at really the top of this bull market that we've been in since 2012 to, or excuse me, that at the top of the bull market since 2013. And I can say that with a fair level of confidence that this is what's happening. Now if we go expand this out a little more, we have longer picture here, what's happening, and kind of going forward, where are things going to end up. So this is the major retracement. We've got down there, we've got the double bottom all the way up here. This is a flag within this Elliott wave. I'm not going to really go about doing that. And then this is I'm trying to decide if this is a simple or a complex pullback, because that's really going to decide how we are going forward in terms of what pullback we're going to get. I'm kind of torn between the two. I'm going to say that this is a complex pullback, just based off the fact that a new high was created in the market on, well, not a new high, excuse me, but a high within the flag and in the month of July. So that's what I'm going to call that a complex pullback. And then, all the way, if you go all the way up to here, the end of that wave, so that's more or less signifying the end of this bull run. We could break higher. If we break higher, then I'm going to be going long. Right now, I'm strongly suggesting selling calls. But, now it's determining, what we do with this information. Where is this market going to go? Elliott wave theory is saying that, on the monthly time frame, this time frame that we're looking at, it's going to pull back to where the fourth leg ended. So that's giving us 84. And then, it should go new highs after that. I'm not going to project that. So we're looking at almost 84 for this pullback on the monthly time frame. And that's something that, I'm looking at. And, also, too, if we pull up Fibonacci's, they're saying fib retracement off of here all the way up to here. That makes sense on this time frame. That the monthly is going to say we pull back. That's the 78.4 fib. That makes very common sense to where we should pull back to. Excuse me, that's incorrect. I made a mistake there. Negate that. We're going to this bottom of wave 1 down here of where fib retracement things are going. So we got the 68 down there. That makes sense along Fibonacci rules. Now it's a matter of, aligning things up. It's $1 off or $1.50 off. It's not perfect. Maybe that looks a little better, but ultimately it's really close. Now we're gonna do the daily pullback and kind of project that out. Where that this is going to end up. As you can tell, now it's starting to get very complex on where things are going. So we draw it off the low to the top. And one thing that you notice that there is a lot, one of the Elliott wave theory principles is that, you kind of go towards, your target is based off of where there's multiple Fibonacci retracements. And, you see that there's 2 right around this 90 area. So, if we do get a longer term pullback, this 90 area is where it's most likely going to end up. So I would be looking, I'm actually in a position now of being short calls of 105 calls. Excuse me, 150-cent calls. I'm short those right now. And, I'm really looking to pull this back. Like I said, I'm really targeting this 94. And if that 94 breaks, then, 90. Then, if that breaks, then all the way down to, 84s. So that's kind of what I'm watching here over the next few days. And, based off this monthly, this is actually this is kind of getting confusing. But, we are due for a pullback that really should last, a few months. This should become choppy. This shouldn't be, a fun market for the next few months. So, combination of winter and everything else. It's not a time that I want to be actively trading. So I'm thankful that, I'm getting a job soon. But that's more or less what I'm seeing along in here. So, don't be overly bullish right now is what I'm trying to say, that everything's kind of lining up for, correction here, of a 10% correction. So I wouldn't be overly bullish right now. I would be looking to sell calls, and once we can get some confirmation, I'm going to be in puts. I am triggering short off this low of the day, and then riding my puts. These are going to be shorter term puts. I'm going to get October monthlies and be riding it down to this 94. And then that's the point that I'll sell them. And then once we get, more or less another shoulder here, then I'll be looking to get more. Corrective patterns in Elliott waves are, I can't remember off the top of my head if they're 3 or they're 5 wave structure. I believe that it goes, yeah, it should go down here. We get a pullback, and then once the pullback happens, then looking to short that pullback too. Looking to short the bounce. So ultimately, is that there is money to be made on the short side of this market. So go ahead and really be looking to go short. This theory is incorrect until we break out of new highs. If this is a flag and an ABC correction of shorter time frame and break new highs, this market's going to want to just rip higher. I mean, I could be wrong on this. This third leg here, this third leg could go all the way up here, but I mean, you're correcting it the fourth leg back to here. So that's, in my opinion, that's the correction. So, I'm I've been bullish for a while, but now it's, I'm really short up until this 150 gets taken out. So anyways, that's just kind of what I'm seeing. Sorry, this was a little long, but that's kind of how I'm seeing the market right now. And, that's not going to change up until that we take out that high. So anyways, thanks for watching and like the video.